All right, guys, let's just do a quick sound check. Let me know if you guys are hearing me good, and then if everything's good to go, I'm ready to rock. We can go. I got 3 different beers, 3 different styles. So many people are already trying to pick what I'm drinking. Let me know. Let me know right now, guys, if you guys can hear me. Good to go. How's the audio looking? And then we'll get going. Audio's great. Good news. Let's do this damn thing, man. Let's do this damn thing. What's up, guys? How are you tonight, guys? Thank you so much for being here. Sad but true. A couple things I want to ask you guys. I rebuilt my whole desk, so I got new lights. I feel like I'm a little orange tonight. I'll have to figure that out by my next video, but got a good show lined up for today. We're going to be taking questions as always. I'm not going to be crushing drinks. This is my last. Actually, it's a school night for me. So last night was my last night of summer. Summer is gone, but I have, in no particular order, I have a. Actually, someone did say a pale ale. I am a little tan. Thank you. Spent the weekend on the beach with JJ. I have a sour India Pale Ale. So a sour IPA, apricot, passion fruit with AU summer hops, Haltertau Blancs hops, and some Mosaic hops. 6.5 alcohol by volume. This is a collaboration that my brewery Dubco did with a brewery in the Bronx here, Gun Hill Brewing. They're awesome. I got a Miller High Life because I drank 11 of them on Average Money's live show, and I got one left. And then just one more White Claw for all the white girl wasteds out there. We'll get a White Claw tonight. So besides that, sounds exotic. Yeah, very, very exotic. Besides that, I'm going to talk about my investing criteria. Inside my Discord, I have a chat that's like my investing criteria, my options criteria. So I definitely am going to focus on those tonight. I'm sure you saw on the main channel, I tried to take some clips from that. Maybe I can, yeah. So I tried to take some clips from the live stream and put them in my channel. Some of them did well. Some of them did not do so well. But I am going to continue to try and do that. So I'm going to go through my investing criteria this week. Some people have been hating on all the options video and options content. So we'll talk just basic investing unless you have options questions, because you guys are here in the chat tonight. So I will definitely get to those first and foremost. And then next week, maybe we'll go through my options criteria, look at all the different Greeks and stuff. For those of you that watch the main channel on the regular, the main video, I didn't let out a main video last week. Last week was freaking crazy. My AC blew, my microwave went, JJ was coming, Tara's 90-year-old grandfather was in from out of town. This week, going back to work, so we'll see. But I'm going to get a main video out this week. It's going to be on options vocabulary. So many times I have so many options videos, and every time I'm like, look it up. I got an options video for everything. Somebody's like, well, what about just basic vocabulary? Yeah, I did the Greeks. I did IV. I did some of them, but I've never broke down what's a strike price? What is premium? Other things like that. What does expiration mean? What is the mark price? All of those things, I'm going to make a full video, kind of like a glossary of terms. That's going to be the main video that comes out this week. Oh, gosh. All right, here's the guess. Which one am I going to pick first? I'll give you a couple seconds. Put in the chat. I know this is on 10-second delay. Which one am I going to open first? While I'm getting ready to open up a beer and while you guys... thank you so much. Oh, man, how do I say it? Luciano? Thank you. Thank you for being here. I'd just be sitting here talking to myself, making a regular little video if it wasn't for you guys. Sorry if my eyes are down, guys. I got the chat here. I have my monitor over here, so my eyes will be all over the place. But when I am trying to talk, I will try and talk right up to you guys. Finish off that 12-pack. That's right. The first one for the night is going to be Miller Lite. Let's start with the champagne of beers, guys. Hopefully you're having a beer even though it's Sunday. If you're not a drinker, good for you. I wish I was on that track. Maybe one day I'll probably have to stop. But if you are still drinking, I hope you have something. Grab something, a glass of wine, whatever. It just makes everything a little bit better. I know that sounds so alcoholic of me. Alcohol makes the whole life better, but no, it just makes my night. It's kids are in bed, I can kindly just kind of relax a little bit. First question from the chat, Aaron Azevedo. You got a question starting off a small business. Typically, if the expenses far outweigh the income received in the beginning, how much of that can you write off? I know you're not a tax guy, but I have opened many, many businesses. I've gone with the general rule of thumb where you can pretty much take 2 to 3 years of losses. It should take you 3 years to really grow your business. I would say that the IRS probably wouldn't expect you to make money in the first, unless you're like a booming business. I know that at the brewery's like 6 years old and probably still, I don't know if they're profitable yet. They might be. Like I said, since exiting that business, I don't exactly know the numbers, but like watching things and knowing how much things cost and seeing what Chris is getting, I think there's a pretty good chance that he is going to be, writing off more. He bought a canning line that's hundreds of thousands of dollars. He stocks a ton of inventory. And you also got to look into certain things if you are an inventory business. There's different ways to do accounting, so you're going to have to talk to your accountant about that. But I'll give you an example here on YouTube. This is going to be September 17th comes up on my 4-year anniversary here on YouTube. This will be the first year I'm profitable in this business. And I'm trying to break even. I'm trying to get to even. I mean, that would be a great goal, right? So I have to pay myself a salary. That's a tax write-off, right? That comes off my top line. So salary is a big, big write-off. And essentially I could pay myself a salary that matched the income of the business, especially being a sole prop. But like I said, I just put about $300 into my set. I bought a desk. I bought a new microphone, a little stand that JJ coming, traveling here. Every time I bring a podcast guest out, those are different expenses. I wouldn't so much. I think more people, it's hard to say. It's like fear write-offs and fear expenses, but this is where a relationship with a CPA really, 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 really is a big deal, especially with laws changing every year. For example, 2 years ago, entertainment, you could write off 50%. So, you take a bunch of clients out to a business dinner, it's $100. You could only write off half of that. For the next 2 years, it's 100%. So now instead of like having people at the house, or if I'm going to have a podcast guest, the first thing I'm doing is, hey, let me go out to dinner. I need write-offs because I don't want to pay taxes. So also knowing that change and that evolution, I look for write-offs. At the end of the year, I had a couple write-offs. I bought a gimbal, things like that, things that I'm going to need. And maybe I don't need them till like later stages of next year, but I don't know what my income on YouTube is going to be. So my goal is always to try and like kind of break even. I mean, it's great to have like working capital, right? But if you have a certain income, like I kind of with this business know it's going to be, but with Dubco, we pretty much worked right at even because things just come up, but you don't want to overwrite things off, and you also want to make sure everything's legit. Like I don't take my wife out and say that's a business meeting, like I don't do that. That's illegal, right? That's tax fraud. So I really wouldn't too much worry about it, especially in those first 3 years. You should be taking losses. I will go out and say that if you're not taking losses, you're probably not growing your business fast enough, or you just have a ton of capital and you probably should have started your business a little bit bigger. Even with the Average Money podcast that JJ and I have, we always talk about how we're saving liquid cash for rental properties. That's above and beyond trying to find as many write-offs as possible, right? A $2,000 website, streaming services, all of these things, microphones, recorders, SD cards. We are trying to purchase as many things now while the income is up so that, at the end of the year, we have to pay less taxes. But yeah, I really make sure that you're putting money into your business. Just like if you were, a personal entity and like your own house, like you want to take money and you invest in yourself, right? You get a gym membership, you take your wife out every once in a while, you buy yourself nice clothes so that they don't have holes in them. You buy nice sneakers so that you can run this, that, and the other thing. Put money into your business, put money into building it. When it's time to grow, it's time to grow, and when there's things that's going to make your workflow. I'll give you another example. I've been editing on iMovie my whole life for the past 4 years. I just recently downloaded like Camtasia. It upped my editing. It slowed my workflow down a little bit now, but it's going to speed my workflow up later. I hope that kind of answered your question there, but I really wouldn't be too worried about it. Where's the Bud Light? No Bud Light tonight. I had Budweiser's, but No Budweiser's either on a school night, and I also do Sober September. So next week's live stream we'll have seltzers or something, but maybe some coffee. But there will be no beers next week, even on average money. I've broke Sober September before. We'll see. We'll see. Let's see if there's any other questions. What's the best option strategy for weekly income with a small to medium account? Poor man's covered call. Simple as that. Poor man's covered call. I mean, small is definitely relative, right? When I say a small portfolio, I say like under 10,000. Sometimes when I say I make a video about a small portfolio and I say that I have 10,000 and people shun me like I'm Jeff Bezos. Like, how dare you call a $10,000 portfolio a small portfolio? So with that said, I'm saying that a $10,000 portfolio I consider small, and that's the portfolio that I run. If you follow me on Discord or anywhere else like that, you see that. That's what I run. So, and I'm like 100% profit so far for the year. Even since Vuzi corrected, I think I got down to like 94. Yeah. If you want to see, let's take a look at my my moves from this past week, guys, and I'll show you some of those. Let me see. Gotta make this screen a little bit bigger over here. If you're over in the what was the beginning of this week? What was the date? I want to say maybe the 22nd. So if you guys are not in the Discord, here's kind of people ask me like, do I alert people? And maybe this can be kind of like my moves, and then we'll get into my criteria also. I know a lot of people just are here for what's coming in the next coming weeks, but I know, guys, if you're watching on a phone, this is going to be small. I apologize for that. I'm trying to work on ways to like make this bigger, but this is like the best I can do right now. I really do. I apologize if it's small. I know if you're watching on a phone, maybe you can get back and see that. I see there's questions, so let me get to the questions first. How much of a leaps applies to collateral in a poor man's covered call? See, Knight, the leaps is the collateral, right? So when we do the wheel, right, when we are short positions, when we write calls and puts, when we write a call, the 100 shares is the collateral. When we write a put, then we use mostly going to be a cash secured or margin, but usually a cash secure. The collateral is the cash to purchase those 100 shares. When you write a leaps option, right, that leaps option, which is that's a buy of a call, and a buy is the right, not the obligation, to call away 100 shares from somebody, so you'll own them. That's the collateral. So if you get assigned on the poor man's covered call, that short call, you're going to automatically exercise that leaps to get those 100 shares. Then you're going to use those 100 shares and you're going to cover the short call. So no shares that's a debit spread, right? So in a spread, no shares really come to you or go from you, which is kind of the reason why I don't like spreads anymore. Because when you get burned, you're out money, right? When you wheel, if things don't go your way, you either have to sell shares, but you get money in your pocket. And with the put, you either expires worthless or you get shares, right? So I like that because I'm at least going to get shares or money if I get screwed. In a spread, you just kind of lose. There's no exchanging of shares. There's only exchanges of contracts. And this is kind of that video that I made when I said the difference between buying and selling a call and buying and selling a put. We need to understand the differences between buying and selling shares and buying and selling options contracts. And that's why the long call, the leaps option, that's why that is going to be the collateral for the poor man covered call, for that short call. Do you account for taxes when adjusting your basis down when you sell a covered call? No, I do not. I factor my taxes quarterly on a big picture. So if you saw a video that I posted a couple weeks ago, maybe a couple weeks ago, I showed I'm up to like 300 and something option plays, right? 150 open and 150 closed roughly. So over 300. If I had to sit there and try and calculate taxes on every single one of them, that would just be overkill. I'd drive myself crazy. So I do it quarterly. I know how much my taxes are. I'm also not taking my premium and spending it right away where I'd get to the end and then I don't have any money to pay my taxes. Like, that would not be cool. So, I mean, the short answer is no. I don't factor in taxes really with any of my income because I know that I do it quarterly. I do a full profit and loss statement. I do a cash balance sheet. I do everything for my own personal life like I was a business. You are the CFO of your life. So every quarter you should be doing that. And that's when I'll say, okay, I made 150 options plays. This is my net premium. Then I pay my estimated taxes on that, or I take that and I put it into a sinking fund. It's I don't know. Maybe some people could do it. I don't have the time to do it on an every single option type basis. Well, I'm answering these questions. I'll go back to the main scene so you don't have to stare at that little screen. But that was pretty much it. How much does... Did I miss something? Oh, I got it right. Okay. The video quality seems a little blurry. Tried raising the quality on my end. I don't know if it's due to the feed. Should be 1080, bud. Should be 1080. My other screen is probably crap. Like, I just bought a new monitor. That's not here yet. So... Patrick, is this cool? Because this should be 1080 right here. 720 worse, depending on the latency. When I go and show my screen, it's probably a bag of D's. Not going to lie. My covered call are in the money, but still far from the expiration date. I feel like the strike price may have some resistance. I want to sell my shares now, but closing the call would also mean I would lose money. So the value, if you're going to buy the close, buying a close would put you at a loss. Yeah, that sucks. I mean, you can't beg somebody to exercise the option. So to get out, really the only thing is to get signed. Very rarely can it happen. So you might have to just wait till expiration. You own a crypto? If so, which coins? I own a sliver of Bitcoin and a even smaller sliver of Dogecoin. I think like to the tune of like $50 in Dogecoin and maybe like, actually I can't even make up a number for Bitcoin because I have been selling some of it off. So I don't actually know exactly where I'm at. Which credit card are you using most of the time? Oh, wallet. Right now I think I'm on the Venture card, Capital One Venture card. Pretty much switch mine out every 3 months. I'm on the Venture card right now. Capital One Venture card. Thing is a brick. The other ones, the no-fee ones I keep in my pocket. I keep the Jasper card in my pocket just because I like to have a couple cards, raises my credit. So I'll throw some stuff on there here and there. Another no-fee card that I have is I think I have the Chase Sapphire, but not like the preferred, just the no-fee Chase Sapphire. But right now, the one I'm running right now, just through the walls, is the Capital One Venture card. That's going to be switching up soon because I play the bonuses. So, and I get, you know how you get the bonus every you got to get $3,000, something, $5,000 every 3 months. My daycare lets me use my card, lets me use a credit card. So I haven't been paying daycare while I've been home on summer. So I haven't opened a new card, but now that I can, and now that I'm paying daycare again, which is $3,000 a month for me, I'm just going to start opening some more cards. The next one's going to be the Chase Business Inc. because I have never opened a credit card for my YouTube channel. So that's going to be the next card that I get. And I think right now they're rocking like 60,000 points is the bonus. And I get that in a month. And then, I don't really worry about the fee for the first year because I make I crushed the $95 fee if you know how to use credit cards properly. What are the questions we got? Oh, God. Left stream, rejoin. Okay, sweet, bud. Yeah, like I said, when I share my screen, this monitor that I have, it's a pretty old Sharp TV from 2015. It's not even HDMI'd in. So, but I should be getting a new monitor, I think tomorrow. I'm really interested in the Fidelity card that lets you put cash straight into your brokerage. JJ loves that. He loves it. He's all about it. I'm all about stuff that I use more. I don't need cash back to go into a brokerage account necessarily. And then again, in the same breath, I'm online for the M1 Finance card. But that's 10% cash back if you use. I looked at the list of things that they have, and I use most of them. Some people can really have 4 or 5 cards and be like, oh, this is my grocery card because that gets me the most cash back. This is my, my Uber card because it gets me the most cash on Uber. Like I said, I'm there for the bonus and then I get out. So the venture card will be going bye-bye. And then if that M1 Finance card comes around, I'm probably going to use it. And I'm not going to tell a lie. I'll say it to you guys because there's only 36 of you. That 2% margin from M1 Finance is calling my freaking name. If there's a correction, and I've said this on the Average Money Live, if there's a market correction, Brad Finn is going to become a margin investor at 2%. David, cashback is great, but I've always found that I do much, much, much better with points. So when I run points, I always do better. I'm always at I can always find deals between 1.5 to 2 cents per point. And that for me is just much better than I ever get with cashback. I got a signed SAVA at $100 per share. So the strike was 100. It's now at 58. Yikes. What do they call that? Bag holding, right? Should I do a $40 put tomorrow to lower my cost basis if I get assigned again and start selling cover calls? There's a couple different strategies that you can do. It depends. I guess it really depends on why the hell did it go to 58, and where's it going? I don't know much about that company, so I can't say why. If it was me, let's say it's a share that I own, let's say it's Tattoo Chef and it goes from 100 and goes down to 58, I'm going to bag hold that until it climbs up a little bit, and I'm going to start writing calls against it because obviously I'm not going to be able to write calls and get any premium for a $100 strike. I might sell puts. Not a bad strategy. You could do that, but you got to watch out because if you sell puts, maybe you sell puts at 50 and then it goes to 20, well, now you're really up shit's creek without a paddle. So, it all depends on what your goal is and what your exit strategy is. But for me personally, if that's a mistake I made, then I'm just going to suck it up. I'm going to bag hold, or I'm just going to sell it off and start over and take that loss, take that L, because that's going to happen. But if I'm confident in the company and it dropped because of bad earnings or something like what happened with Vuzi, and then it kind of is creeping right back up. Same thing with Tattoo Chef. Then just hold it, bag hold it. I bag held Wells Fargo for 2 years selling calls until I broke even on that thing. And then it even made me some money. So, does opening credit cards back to back hurt your credit score? Definitely getting inquiries on it. It affects it short term. But I think the bigger question is why do you want to? To be honest, especially a fee card. If you're going to have a bunch of no fee cards, that's fine because then you're helping out your debt to income. But you have to make sure you use them. Like I said, that Jasper card, I just use it for gas. Every month I'll fill up my tank once with it just to show that I use it. And that it shows, with those no fee cards that really don't get me a lot of points, don't really get me a lot of rewards. They get me a ton of credit. I think I don't even look anymore, but well over 800 is my credit score. So getting hit with that inquiry, yeah, it's going to drop it 2-3 points, but it should adjust itself way back. It's not that big of a deal. I know with things like mortgages, you can get hit on a mortgage. You can look for different lenders and you can shop around and you can get hit as many times for a mortgage inquiry in a 90-day span, and it only affects your credit score once, and that depends on your state. So there are some things where you can shop around, but with credit cards, I think you're going to get that inquiry every single time. In Canada, cashback cards are only 1%. That's not terrible. 1% cash back, but like I said, I can just do a little bit better with the points. Have you thought about tax liens? I absolutely have. Here in New York, they just wouldn't work, especially depending on where your state and your county, how long you have to wait before you can evict and things like that. In the state of New York, it doesn't worry. But I know many, many people, if you go on Bigger Pockets, their forums, and you look at the tax liens, there's people on there that are just killing with tax liens. So I'm definitely for it. It's just not something that I can do in my state, and it's definitely something that I want to know the area. I want to be able to maintain that, unlike a buy and hold where I can get a property manager, things like that. If I'm going to do a tax lien, I want to be there. So I've thought about them, but I just can't do them here. All right, so let's get over here. Like I said, I don't know how I can make my screen just sucks. Sorry, it's week 4, bro. How do you track trades that would trigger a wash sale? I don't. Like I said, I look at that quarterly, and that gets all factored in quarterly. Because when am I going to see a wash sale? I'm going to see a wash sale if a Leaps goes down and I have to sell that Leaps to close and then open a new Leaps. But that doesn't really matter to me that much because I plan, when I make a Leaps, I plan on the future being well above that. So I don't really think about the wash sale that much. I really don't. the whole like tax side, I think don't like confuse me not caring with taxes with not being super efficient with taxes. I am super, super efficient. I know where I can do well with taxes. I know where taxes will hurt me, but I don't think about how they affect my income, and I don't not make money because of them. And I don't not protect money because of things like the wash rule, right? So I definitely know how to be tax efficient. I'm not downplaying like, oh, F taxes, I don't care. But what I'm saying is like, there's some things that you have to take the L on with taxes. Like you have to. And sometimes when I trigger a wash sale with the leaps, it's not that hard. When you sell leaps at a loss, just know that you have to wait 31 days. It's not that big of a deal, and nothing huge is going to happen in 31 days. And if you thought something was going to happen huge in the next 31 days, then you wouldn't sell the leaps off, because I'm not even going to be holding a leaps with 31 days of expiration, right? My threshold at 60 to 50 to 60 days, I'm not going to be holding that leaps anymore anyway. So if I'm looking at 50, 60 days, I'm taking that at a loss. I'm going to take that L. I'm just going to wait 31 days and I'm going to reopen it again, right? Because if I think it's going to swing back the other way, I don't really care that much. All right, let's go over here. I'll talk them through because, like I said, they are a little bit blurry. And then next week, we'll just up this again as I get my new thingamajiggy. Actually, I wonder if I could try and change it. Nah, I'm not gonna screw with it now. I'll just show it. Not a big deal, and I'll just highlight what I'm pointing to right here. So this week, if we go to 820, was 820 this week? No, 820 was last week. So 823, my newest leaps, and maybe, I don't know when 823, today's 829, so maybe this was last week, was HPQ. I got that for $22. And I wrote here HPQ. And guys, for those that weren't here before when I opened this up, and if you have any questions about any of these, please leave them in the chat. I'll be glancing back and forth. This is what you see inside my Discord, inside options trades. I'm not an alert person. I don't tell people, but I always tell people after the fact and kind of give my thoughts. And that's kind of why I made this live stream channel, so I can give some thoughts like going into this week and things that I'll be thinking and looking at. I don't know why I have such a frog in my throat tonight. This is a value play for me, not expecting a ton of growth, but I feel like with their balance sheet, they can weather the storms that may be ahead. The premiums are also decent. Should be able to chip away at the $740 in premium pretty easily. So the Greeks on this, you definitely probably can't see these. I got this Greek 0.82. This expires 1/20/2023. The gamma doesn't really matter that much. Theta is non-existent, 0. Implied volatility. Now, full disclosure, and somebody in my Discord pointed this out, I looked at the wrong chart, and I thought this was a low implied volatility. Their volatility doesn't change that much, but this is actually, they're at 100% for their volatility range right now. So 28 is actually on the high end of their implied volatility. Super low, but like we said, we have to compare it to its own historical average. So I might see, the value with extrinsic value, if implied volatility drops to 10% or something like that, which is kind of like lower than the mean. Even the mean was kind of right around 14, about half of this. So I might lose some value there, but I think it could kind of stay up. I looked at that chart, and it was posted in the Discord as well, that it kind of stayed pretty steady. But that's really all you need to know. $738, expiring 1/20/2023. And yeah, open interest was $14.55. Not that big of a deal. All right. Things to notice if you're learning. So guys, once again, here's some things I talk about. Notice the 0.82. I essentially just bought 82 shares, a $2,318 value for $740. So if you don't know what a leaps option is, that's why I do the leaps, because I was able to buy 82 shares for only $740. Theta next to nothing. That's great. IV low. I screwed that up, as I just mentioned. The break even is $29.40. So I'm only $1.20 away from breaking even. The current share price when I did this was at, I can't even see that, but 23 and change. So I was pretty much, no, it was $30. So I'm only $1.20. So that means between now and 2023, I only need this thing to go up $1.20 for me to break even. So that's kind of another beautiful thing about the leaps, if you have the discipline to wait to 2023. I immediately sold a call right after that. and then I tagged the different chats in my Discord. So I got $28 for that call at a delta of 0.24, which, as you know, is pretty much right at that threshold for my poor man covered call delta. The reason I chose 0.24, and like I said, I say 0.2. The next one under this was like 0.14, and that was a little bit too conservative for me. So I was able to get $28 for this one. Thanks, everybody that gave me one of these little emojis there. Then I I sold a call on Starbucks. Okay, so I got another $30 on my Starbucks, $119. Vuzi, I wrote, Vuzi always making me money. Doesn't matter if it's up, down, or sideways. I gave a little PSA because we talk about Vuzi so much inside my Discord that I wanted to make sure that people knew that most of the people in my Discord have been trading Vuzi for a very, very long time. So I got 2 calls at $64, and that was just on a little bit of a bump. And like I said, with a basis down near close to $1, I can write calls at Vuzi at any price. So I kind of just wait for green days. All my leaps are now full, so I had a ton of open leaps going into this week. I got $25 on Tattoo Chef as it approached $20 again. Seems like forever ago that my $22 put, I seemed like the biggest donkey in Tattoo Chef history. Everything Money came on and bashed people like me and Jeremy about how terrible Tattoo Chef is, and they didn't do their due diligence on it. So I jumped right back up. What delta would you get rid of a leaps option before it became illiquid? To quote Jeremy from Financial Education again, I don't go into a leaps option with an exit plan. That's like going on a first date and asking her how long you think it's going to last. I don't really have an exit plan with my leaps, with the exception of 60 days out, I'm going to sell to close either at a loss or a gain. I don't really look at delta on my long call so much once I'm in. Yeah, all right. So as I approach the money, obviously, if the share price dropped towards the strike, the delta is obviously going to change, but I don't care about that because I have till 2023 to really make that happen. Let's see what else we got. More questions. Good. Thanks for the question, guys. How many leaps does one need to bring in $500 in income on a weekly basis selling covered calls? David, I have no idea. Every option's different. Every premium's different. You could probably do it with one. I mean, you could probably do it. You could make $500 with Tesla, I bet. Easily $500 a week if you sold Tesla leaps. January 2024 options will probably be open in a few weeks. Would you prefer those buying? I'm going to go out as far as I can. As far as I can within reason, but 2024s would be going out. I like to just be, as long as I'm over a year so I can get the long-term capital gains once I close those things out. I'm just going to be going out a year. So I didn't skip the Jan 2024 question. Or did I miss it before? I just answered it. 2024. I'm 10 seconds behind, man. Come on. Give me a little bit here. Give me a little bit of credit. Back to my moves this week. I said that all my leaps are now open. A couple minutes later, I spoke too soon. Just closed this for 96% profit. This was a Pepsi call. I got $30 for this one, and I closed it for $2. HPQ had a value of $55 yesterday, and it dipped this morning, 90% profit. So that HPQ call that I opened for $28 or $30, I gave 2 of it back. I closed that option down. So if we look at my Robinhood portfolio right now and what exactly I have open, we could talk about a little bit of next week before I get into my criteria for investing. I have a short call, Starbucks, looks up, Tattoo Chef down, 2 calls here, another call here. So the only naked leaps options that I have, Pepsi, I don't have a Pepsi short call, and I don't have an HQ short call. So those will be the things that I'll be looking to open and write this week. So I'll wait for a green day for HPQ, and I'll wait for a green day for Pepsi, and then I'll be writing those calls. And then anything else, if Starbucks right now, we know that we can't be looking at options premiums, in non-market hours. You can't do it. So I'll make sure that once the market opens, if that stays a plus 62%, I usually close my leaps 40, 50%. So that will get closed. Vuzi, we'll see what happens with that. Those are monthlies. So the monthly ones that have September 16th, we'll wait on those as well. And let's see, the poor man's covered call calculator. Yeah, I really got to fix this. All right, guys, I apologize. I'm a big jerk. Everything's doing good right now. So average return 44% on my poor man's covered calls. I'll take that so far. Yeah, everything looks pretty good. Tattoo Chef's the only one I really got to do some work on. But, I mean, that's really to be expected. They kind of suck right now. I love them forever, but all right. Any other questions before I get to the do you see yourself doing any options on other internet platforms anytime soon? Well, I trade options on Fidelity. That's definitely a platform I use. I hate it. I hate the interface. Other than that, no, I mean, I'm not a Robinhood hater. Everyone wants me to be. I'm not in that crowd. They didn't F me over, and like all the people that didn't read the terms and conditions or don't understand what a market maker is and don't understand who shuts down the buy and sell stocks. Like, I'm not a Robinhood hater, and the platform is so freaking easy. I mean, people like, even JJ is like, oh, my things get filled so much faster on Fidelity. It's all in your head. It's all in your head. I mean, the bid-ask spread is going to be pretty similar. But yeah, I mean, I've done them on Fidelity. When I trade options on Fidelity, I find myself having to go back to Robinhood to like look at the current share price. Because if you just want to see the share price of something on Fidelity, you got to click like quote, research, go to it. It's just, everyone knocks like, I mean, Vanguard's is bad, but Fidelity's really isn't that much better, to be honest. It really isn't. And like things like Thinkorswim, they're just like overkill for me. We can't do spreads on, I can't do leaps options with Webull, and I've never really been a huge fan. And obviously you can't do them with M1 Finance. So with the exception, like I don't have any other brokerages that really allow me to do what I want to do. So yeah, no, I don't have anything wrong. I didn't invest in them. Same reason I would love to own a Tesla, but I don't own Tesla shares, right? It's just, there's a difference between like owning the company and owning the product. Yeah, Thinkorswim's just a little too overkill for me. Like if I start like day trading and things like that, I need charts and lines and things like that. I just need to know. I do love E-Trade. I do love like their implied volatility graphs and things like that. But once again, like I don't need another brokerage account in my life. I do not need another brokerage account. HBQ has weekly expiration dates, which is good. Yep. I mean, I used to hate monthlies. I love them now. As I've wheeled more and now have like 7 or 8 open wheel poor man's covered calls, monthlies is okay. It would be like a little too hectic. Now that I'm going back to work and I'll be in my office and I'll be checking more things out, there's a chance I might go for more weeklies, but I definitely don't not wheel a stock or not do a leaps option in poor man's covered call because it's a monthly. I think that's the wrong mindset to have, right? When we're writing calls or when we're wheeling stocks, that's cherry on top. That's extra. That's like awesome. Good for us. We did it. You know, let's get a little bit more from our already great investment, from our already amazing due diligence. If you're going like, I'm getting into this leaps option because I want to write calls, but shit, it's monthlies, so I'm not going to do it. You got, in my opinion, the wrong mindset. Let's dive into this exotic sour IPA, apricot, passion fruit, and 3 different hops. I think, it's called Right for the Pickins, but let's see. Oh my God, so good. Oh my golly. Oh my golly. So much apricot. Oh my golly. You can Google this beer if you want. If you want to get like all the stats. Ripe for the Pickins, destination unknown beer company. All right, so getting into my investing criteria, because there's definitely some questions that have been coming up, and please, guys, stop me. We can go back to the options questions or whatever. Like, I'm here for you, but I definitely wanted to keep things a little structured, at least so I'm not just babbling on and drinking beers and things like that. But first and foremost, I definitely want to touch upon the whole I'm not a financial advisor. I hate when people are like, I'm not a financial advisor, but you should do this. And I'm not saying that I'm not guilty of that. You know, take, for example, VTSAX. I'll be like, I'm not a financial advisor, but you should pretty much own VTSAX. Like, we do that so much here on YouTube. And I just know from my own personal experience that when I've listened to YouTubers, I've gotten screwed and lost money. I talked about that in a recent video. And I think there's a huge difference between doing what YouTubers are doing and saying and taking the information that YouTubers give to start your own due diligence. And I think that the latter is a great, great option. Like, if you're using YouTubers to learn about stocks and to like, half the stocks I invest in, I probably wouldn't have heard about if I didn't know about my Discord and things like that. So just everything I'm going to say, just take with a grain of salt, because it's me. I've been wrong. I mean, I get a comment every single day on my Ultra video that's 3 years old. Somebody wants to tell me what the price of Ultra is. Like, I get it. I'm not perfect, okay? But I do think that everybody should have a certain criteria, not only when trading options, but investing and in life. You should have a checklist, and you should have a list of things that you want to accomplish with your investing goals, right? First and foremost, become debt-free. And this is not like my Dave Ramsey 7 baby steps or whatever he has, but like, I will say that becoming debt-free is not cliche. It's really, really not. I am 100% firm on a few things that really haven't changed in the 4 years that I've been investing, and becoming consumer debt-free is one of them. Doesn't matter your age to me. It doesn't matter what the debt is. It doesn't matter what your income is. Being debt-free is going to hockey stick your net worth. And if you don't want to do it, you're like, I could make more in the markets than what I'm paying. That's fine. That is absolutely fine. But instead of your net worth going like this, it's just going to do this maybe. Or we have a correction and it dips. The only guaranteed way to increase your net worth is to pay off debt. That is the only guaranteed way. You invest it in a house, that house could burn down. You invest it in cars, fine wine, the stock market, VTSAX, VTI, that can go down tomorrow. But if you pay off $1 of debt, your net worth is going to go up $1, and that cannot change. It's the only guaranteed way to increase your net worth. You need to pay off debt. Now, some exceptions to that rule and some things that I think about. Roth IRA, I can find room for the Roth IRA while being in debt because it's time sensitive. I really can. Not max, but depending on your situation, people can talk me into investing in their Roth IRA. I didn't. I wish I did. That's a regret I have during my debt-free journey. I wish I would have invested more into my Roth IRA. I wish I would have. Employee match 401k during debt? Definitely. Definitely taking free money. Like, it's hard to argue that point. Like, hey, I got free money. Should I not get free money? Yeah, no, you should pay off your debt instead of keeping free money. So that's it. But mortgage aside, because mortgage to me, even though your mortgage isn't necessarily an asset, most would consider it a liability. I could tell you that my argument to that is I have a HELOC that has made me hundreds of thousands of dollars that I got with the equity in my house. So my primary residence has made me money. So my primary residence is an asset to me. But please, guys, just try and get out of debt if you have consumer debt. I beg you. It's kind of like going for a run. It sucks while you're doing it. It sucks thinking about doing it. It sucks getting out the door, but every single time you get to the end, you're happier. Please, please, pay off your debt. Have some liquid cash around. I always want to have some liquid cash around. I always like to have like at least 1 month in my bank account. Everything else is invested. You guys know that. But know your boundaries. Know how that's going to help you, right? Know that if ish hits the fan, you have some liquid cash. And people ask me all the time, what does liquid mean? For me, if I can access it in 3 to 5 days, then I call that liquid. Even if I have to sell stocks, I call it liquid. Max that Roth IRA out. Like I said, time is on your side for that. Like once time goes by, you can't invest anymore. So please just max that out. As far as like 401ks, 403bs, and 457s, it's all fees. You got to get your fees going. And for some people, it doesn't really matter that much. And for some people, the 401k is a terrible option and you just get the match and you get the hell away. I think this is going to be the first year that I do not invest in my 403b. My 457 is already maxed going into this school year, but I might not put money into my 403b. I think I'm just going to do my 457 this year because I know that I'm probably going to be retiring soon from teaching, and I want that money more liquid. And when I put money to a 403b, 401k, if you think you're going to be retiring early before 59 and a half, you're not going to be able to touch that money, and I want to be able to touch it. So I'll defer some tax savings on that 403b, knowing that I have $19,500 already in my 457. I'll do that. Dividend stocks versus growth stocks versus ETFs. I personally think people should have a majority of their money in broad-based index funds and ETFs. As far as dividends and growth, I think if you want your money now, do dividends. If you want your money later, do growth. I think younger people should probably do growth. Just my opinion. Oh, man, they're dropping like flies. We're down to 29. Do people not want to talk about my investing? What do we want to talk about here? Where the hell's everybody going? Son of a beeswax. 29. We just had like 35. Yikes. Some other things that I have in here, guys, since I know we are losing people. You guys know how I feel about like speculative investments, 7% options, stocks, Bitcoin, things like that. Dr. Horton, you're always here. You've been here forever. When did you subscribe, Dr. Horton? Long time ago. I have in here, I don't trade on margin. I mentioned that might change. I ended like in this chat, I said, and this is like what have been one of my favorite quotes of recent. And I'm not a quote person, but like keep learning and evolving. Consistency in regards to opinions is the slow poison to the intellectual life. I like that I used to love dividends and I hate them now. I love that I used to hate options and I love them here. I love them now. And I think a lot of us too, we get so caught up in I'm this type of investor, or I do this, or I believe this, or I think the first time I realized that I was allowed to think for myself was when I finally cut the cord from Dave Ramsey. And I was like, oh my God. I'd have to check. It's been a long time. Change your mind. You're allowed to do that. I embrace that. Change your mind and keep investing. There's we are here. But like I really just think that you can always be changing your mind. If you are investing the same way you invested 2 years ago, I would say that you're probably missing something. Yeah, I said it. I would even go as far as saying like a year ago. Or let me say this, maybe not like if you're trading the same or investing the same. I would say that if you haven't added like a tool or an investment strategy to your tool belt in the last year, then you're a little bit too complacent. You need to read another book or figure out another way that we can invest and make money, whether that's maybe it's getting into, it doesn't have to be stocks or options. Maybe you can change your mind about how you felt about real estate or how you felt about holding cash and lending money. You should always be thinking of ways, and when somebody speaks, I regret so much in my Discord, Luke talking about the poor man's covered call for months. And I was like, nope, sorry, bud. And he's like, Brad, just let me tell you about it. And I'm like, dude, that's poor man in the title. And it's an option. Like, no. And he's like, come on, Brad. And I'm like, no. And then I heard somebody else talking about it. And I was like, that's brilliant. What is that? And they're like, oh, it's a diagonal debit spread. People just call it a poor man's covered call, though. And I'm like, oh, man, I screwed up. And I screwed up bad. So I see so many people. JJ did that to me, too, with options. No, Brad, I'm not trading options. No, Brad, not doing the wheel. And then saw a video like, hey, man, you're talking about this passive income you're making. Well, how'd you make that? I'm like, the wheel strategy, you jerk. So please always be evolving, try different things, even if you're afraid to get burned, so many times, man, I get this every day that, that I've become an options channel. It hurts my soul, but maybe I make a lot of videos about trading options, but I think from day one, 4 years ago, September 17th, 4 years ago, when I started my channel, it was just going to be about my journey. Right now, a large part of my journey, what up, Gilly? Right now, a large part of my journey is trading options. Like, if you don't like it, I'm sorry. I'm not going to be one of those guys who's like, you know where the exit is. I'm not that guy, but like, maybe if you've been with me this whole time and then I zagged to options, maybe you want to maybe start to think about it. I don't know, guys. It's now 9:00 Eastern Standard Time, and it's a school night. I'm going to get through this one. If there's any other questions in the chat, I would love to answer them. If there's topics for videos that you want me to talk about, I also put in my community tab. I've been a lot more active on that on the main channel for this video that I'm doing this week. That includes all of the options vocabulary. If you have any vocabulary that you want me to answer inside that video or something you don't want me to miss, you can either head over to the community tab and write it in there if you think I'm going to forget, or you can write it here inside the community tab. A lot of people mention things that I've already talked about a bunch of times, so it was easy for me just to link a video, but there's going to be a couple other things. Just join your live channel. Thank you so much, Brett. Yeah, and only 4 weeks old, so we're about a month in. I hope to do every week. I say I'm going to do more during the week. I'm always going to do Sundays, barring major catastrophes, but I'm going to try and hop on a couple times even during the week and just talk about things that come up. I just wanted a place where I could come on and just do long-form content without worrying about the algorithm, without worrying about monetization and views and subscribers. I just wanted to go back to the beginning and kind of start over and kind of just do the damn thing. Any new with M1 Finance do you know of? Can you rephrase that? Because I don't really know what you mean. Anything new? Anything new with M1 Finance you know of? I know they have like a card coming out and things like that, but not that I know of. I love M1. It's my go-to, my favorite. Yes. Patrick, thank you for that, bud. Thank you. And not thank you because I need the validation. Thank you for putting it in there so other people can see. Like, thank you. Because I owe that thank you to many. I owe that to Adam in the Money. Even though he does not return my phone calls, even though he will not be on my podcast, I'll still give him credit because I'm that guy. Like, if I wouldn't have bumped into that dude on YouTube, I never would have traded options ever. And it's almost flattering when people are like, your video is just like Adam's. It's like, sweet, because that dude is effing smart. I watched his video 700 times before I started trying it out on my own, and I've been trying it out on my own. So if I've learned it and can explain it as good as that dude, hell yeah. That's a compliment that my video is just like Adam's. I love that. This channel is not featured in the main channel. No, I mean, I haven't made a new video since really doing this one. I posted the clips, but I'm going to start talking about it more in the main channel. Definitely got to do that. And it's also, I also got to, I know I got to go in the features thing, and I also have to, I've been pinning it in comments, but like I said, I kind of wanted it just to be like organic, kind of like who finds out about it, finds out about it. When you get here, you get here. Average money going to keep it live on Wednesdays. Oh, yeah. Yep. And we have a ton. JJ was here. We recorded 3 episodes while he was here, a couple voicemail episodes. But yeah, he's back home. We're going to be recording Wednesday nights, at least for the next couple weeks. We do travel in 3 weeks, so we'll probably miss that week. And then we also have a guest. We have Andy Hill from Marriage, Money, and Kids. He's going to be on the podcast, so we won't be live in that week either. Do you get into technical chart analysis? Not specifically asking for a video, just curious if you do. Dr. Horton, to be honest, I made it in my Discord. I have my Discord over here. So because it was heavily requested, it wasn't something I was going to do, but I have a day trading open chat, member trades, and technical analysis charts. I don't speak that much in those chats, but I listen. But I'm definitely curious on ways that I don't think I'll ever be a day trader per se, but I'm definitely into like momentum trading, things like that come around earnings or news. If I can pick up on that, I think that's more along the lines of where I might evolve to. But I'm only looking now to learn, and I ask a lot of questions, but I haven't used them to actually do anything or make any trades or make any moves according to technical analysis charts that I've seen. Right, I'm still in the very, very early stages of technical analysis. I'm still learning about the general patterns and things like that. And, I just recently learned what candlesticks, like the shape of a candlestick and what it meant, and different trailing averages and things like that. So I'm still in the very, very early beginning stages. I have no problem admitting that. So yeah. I mean, I don't think it would be far-fetched to see me talk about it more in the future as I continue to learn from the members inside my Discord. And I've also said this 100 times, like the people come, they see the videos, they come for different information. But for those that are in my Discord, that are in the chat right now, like the greatest value is the group as a whole. And I love that I learn so much from people. Like the true value is not me. The true value of the Discord is really just the group. Robin, thank you so much. I will say that I love teaching things. I'm a teacher, right? Like for those of you that want to knock teaching and say it's like glorified babysitting, whatever, like I have a master's degree in teaching, and I'd like to think that when I explain things, there is a skill to how I present that information and can explain it. So thank you. That means a lot to me. I teach physics, which is some would consider the hardest class you could take in high school. And I like to believe that I could take that very difficult subject and explain it very simply and break it down. Einstein himself said that if you can't explain something simply, you simply cannot explain something. So thank you. I take a lot of pride in being able to like break it down, and that's really why I became a teacher, because I had a teacher that I wasn't a bright kid, and I had a teacher that just would not give up on me and would explain things to me 10 times until he found a way that I understand. So that really means a lot to me. Tyler, awesome. Yeah, no, I don't know. He's not really making, he hasn't been making videos. A lot of YouTubers taking off. It's easy to be a finance YouTuber in February when everything's going crazy, but the last couple months, it's been pretty tough to be a finance YouTuber. And I think you'll notice a bunch of channels. I'm not going to call everyone out that's not making videos, but I'm sure there's a couple people out there that you see that like, and even myself, for example, I'm still trying to post a couple content things every single week. But I haven't made like a specific video in maybe 2 weeks. I did the clips this week, and it's hard right now. Buying any calls on ETFs and leaps. So I just did a video on options with I just did a video on the main channel, which was a clip from last week on trading options with ETFs. I personally don't. I wheel my VTI. But other than that, just the volatility isn't there for me, and the premiums aren't there for me. And with most of the ETFs I found with the leaps, I can spend the money, equal amount of money, somewhere else on a really solid stock that has a really, really great potential for growth, make more premiums, have more liquidity, and be able to trade the short call on them a little bit easier. I'm not against it if you find a really good ETF that you like. But like I said, for me, what I found is that when I look at the return on investment, how much money I'm laying out for the premium on that leaps versus liquidity and how much money I can make in premium back on the short calls over time, that's really, really important to me. And I found that with most ETFs, I can do them with stocks. Take example, Pepsi, Starbucks, all the other ones, even Apple, which is just pretty much like probably could be considered an ETF in its own right. I just found that I can be a little bit better. There are teachers and there are teachers. Yeah. And that you find that out in college, like all the professors in college that are there doing research at the university, and they know string theory, but they can't explain Newton's first law to you. That's like that. You see that a lot. Really, really smart people are not the best teachers. It's the people that struggled with it and learned ways to break it down in their own minds. Those are the best teachers. When I interview for teachers, I don't want the A student Ivy League kid. I really don't. I want the state school, C+, worked his butt off, didn't give up, maybe had to take an extra year. That, for me, is the ideal candidate for me to hire as a teacher, because nobody knows the struggle of a 12th grader trying to get through physics than somebody that struggled through state school but stuck with it because they really, really loved it and they really, really wanted to change people's lives. Thank you, Robbie. That means a lot. Thank you. Like I said, it really does. Things like that. That's what keeps me making videos. I wish there was like, I don't know, you guys might be able to help me with this. I feel like I've done a video on every options thing that I do. Like, I could make a spreads video again. I did a while ago. But then I'd just be making a video to be making a video because I don't really trade spreads that much with the exception of the poor man's covered call. And I redid the puts and I redid the covered calls. Those are like a year old. I know that I have to go back and make more content, especially considering a year ago I had 20,000 subscribers, maybe. I probably had 15,000 subscribers a year ago. So if I released a video last year, there's a good chance that 70,000 people or so didn't see it. I know I have to go back and redo content, and I've even learned more things, but I don't know. I want to make sure that I keep the videos fresh, entertaining, educational. And for me, I'd rather put out less content that's better than like just be like force feeding content. And some of my last couple of videos have felt that way. And the reason I didn't do this vocabulary video earlier is because I felt that like, come on, Brad, how lame could you be? Making a freaking, this is the strike price. Like, but then I realized, shit, that's really important. And people, if you're new to options, you get 10 seconds into an options video and you've already heard 35 words that you don't understand. That's really, really frustrating. So I had to like bring myself down a little bit to be like, remember where you came from, you jerk off? Like, make the freaking vocabulary video so everybody at least has, that glossary of terms to fall back on. Could you Google it and find it in Investopedia? Hell yeah, you can. But you can also look up on Investopedia what a leaps option is, right? Cash secure put with CCL 2 weeks ago, made $20. $20, baby. That'll get you an 18 brick of Bud Light all day. Oh, love it. So up $100. I know it's not that hard. Thank you, C9. Thank you. Please share the channel. I'm almost at 100,000, friends. Almost at 100,000. I think I'm gonna put it here. The silver play button's coming. 4 years in the making. 4 years. Come on, man. Raj asked, how do you screen your next stocks? I use a platform called Stock Rover. Let me bring it up. Raj, give me a stock you're interested in. Can you do that for me? Give me a stock you're interested in, so I can give you a real life example here. I'm just trying to open Stock Rover quick. If you give me a stock, hold on. Baba. Oh, man. All right. So I'm just signing in just so you guys don't see my logins. And guys, there's a link down in the description below. You can check this out for free. It is a paid service. That's a full disclosure. It is a paid service. But with that said, it's awesome. It's also like the Cheesecake Factory menu. I'm going to be fully transparent there. There's a lot. Like meaning like different plans and stuff that you can get. But I use it for research reports. Okay. IYV. You did ask, so I'll get to yours and then we can look at Baba again. So IYV. Never heard of it, so let's see what that is. What is that? Did I look at that right? Or is it LYV? Is it LYV? LYV. Live Nation. Is that what you mean? Live Nation. Anyway, even if it's not Live Nation, we could still use this as an example. So inside Stock Rover, there's everything you can think of. And like I said, some would consider this like a lot of overkill. Generally, what I will do if I'm looking for a stock, Stock Rover. This is really the best one, guys. I'm not just saying it because, like I said, you get the free trial. I have an affiliate link with them. I think I get like $5 if somebody signs up. So trust me, I'm not like, everyone go sign up. I really mean this, and I brought it up because somebody asked. So first, when I screen stocks, I'm going to be looking for companies that I personally invest in, or I personally buy their products and use their products. And then I'll usually come over to here, and you can see like there's HPQ, some other things I've been looking at. But when you click right here, it takes this whole mess of a website, right? And it gives you a PDF printout. Now the PDF printout is going to come over here. So I got to bring this over. And you can print this. And what it is it's probably, let me see. Probably like 6 or 7 pages of everything that you would need to know about this company. This is kind of like where I go for my final, like, I've narrowed it down. Let me see what I can do here. So not profitable. Okay. I look at their market cap. I'm going to go to their fundamentals. Like they're going to give you their analyst consensus. They say this is a buy. I don't really look at that. I'm always going to take my own. I look at how it's outperformed maybe the S&P. So it gives you that. That's a great reading. It tells you when their earnings are. Because guys, when you click this, it gives it to you updated. So this is as of August 29th, their research report. So they print this up in real time. Quantitative scores, they give you some scores on value, some growth, quality, different things like that you can see. Their valuation in comparison to their industry in the S&P 500, their growth, their peers. So these are all the other companies that are inside, their sector, things like that. Profitability, returns, dividend, debt to equity, analysis, revisions, all of these guys. It's so much. So once I get through all of these, now if you're just asking like, all right, what am I thinking about? It really depends on the play. I'm not a stock buyer. So as far as like purchasing stocks for my stock portfolio, I'm an index fund investor. So VTI. When it comes to the leaps, what do I need for a leaps option? I need something that I think over the next year is going to grow at a pretty consistent rate. So a lot of that's going to be blue chip stuff. And then I make some risky plays with like things like Vuzi and Tattoo Chef. But, back to like looking at my portfolio, everything I think like I know probably Wall Street Bets would probably think that like this is the most boring, like run of the mill portfolio that you can ever have. Like, look at this thing. We have Starbucks, Tattoo Chef, and Vuzi. Waste Management, Pepsi, and HPQ, Hewlett Packard. All companies that I think are going to grow at a steady rate. And like I mentioned earlier in the live stream, I don't know if you were in here, but with this Hewlett Packard play, if I bring this up, my break even is $29.40. It's currently trading for $29. So in the next 2 years, 2023, I need this stock to go up 40 cents. That's it. 40 cents to break even. So that's really what I'm thinking. After I made my first covered call, my adjusted basis, I was good to go, right? This delta's actually gone up to 0.83. So that's really what I'm thinking. I'm going with things really that are going to go up slowly, nice and consistent, not moonshots. I don't need any moonshots, things like that. And that's really, that's how I look at it. All right. So that's how I screen for leaps. Just, is it going to go up? And then if I get to something and I think it's overvalued, and no, I'm not saying that none of those leaps are overvalued. I'm talking like majorly overvalued, don't think they can grow. As I mentioned, Hewlett Packard, like being a value play for me, that's where puts come in. And I can't show the Fidelity portfolio because that's mine and JJ's. But, I sell puts on things that I think are overvalued or getting to value where I can write the puts at a strike that means a lot to me. So when I'm screening for stocks, luckily I'm not a dividend investor, so I don't need to screen for dividends. I'm really just screening for value, and I'm screening for growth potential. And I know that value investors, so it kind of contradicts myself. I know that value investors do not want anything to do with overpaying for growth. I'm just not at the stage where maybe I don't get it enough, but I'll pay for 2023 potential growth. What's your strike on the HPQ leaps? $22. Let me see. I'll get it back up. So $22. Its current value. I've had it for a week, so my current value is up a little bit. $7.95. I got it for $7.40. I want to say. Yes, it cost me $7.40, and it's currently trading for $7.95. So guys, that's 1 week. I can make $50. I could sell the closest thing for $50. I would never do that now because I still have a long time. But yeah, I've already done. What is that? I'm up 7% in a week on them at a high implied volatility. They have earnings and stuff coming up. But when's earnings? Oh, it doesn't say it on this one. You got to go back. These are all my watch lists. So okay. So let's take that for example again. Things that I'm looking at. You could kind of see what the value plays are, and you could see kind of what the growth leaps plays are. Like Cisco, guys, is like a put play. Like I'm looking at that for a cash secure put. HPQ, it's already up there, so I have that. AbbVie is kind of like, that's a leaps play. Visa leaps play. I'm always watching Visa. I love them. Lowe's, Home Depot, one of those will be a leaps one day. Intel, that's going to be another put. That's a put play. And then the rest of these I already own. But if we go back to HPQ, what did I want to show on this? I forget what I wanted to show. But their P ratio is 0.89. That's freaking lovely. Love it. So, what delta do you recommend? I've made hundreds of videos about this, so please go back and watch those videos. But I'll tell you right now, at least 7.5. This one was 0.82 when I got it. 0.75. 0.75. Unless I think that extrinsic value is super, super low. 0.75. 0.75. So Ali, I mentioned early in the live stream, I'll just reiterate it, and you can go back and check out the timestamps later. I don't like doing credit spreads because if you lose money. If you win, you get nothing. I want to exchange shares or money if I win or lose. And in spreads, that's not the case. And I just don't like it. Like, you can have a great credit spread that's just working great, and totally out of the money, and then it zags, expires, and you lose it. It's like, and you can't come back from it. And then you just lost money. In the wheel strategy, if you lose on a put, you get shares. And you could do something with those shares to recuperate that loss. In a covered call, you get cash. So you can use that cash. But in a spread, you just lose money. Or you just get a little bit of money in premium. At the end, there's no win exchanging shares. I don't like that. I just don't like it. And maybe I'm missing something. I just don't like it. And I mean, the poor man's covered call is a debit spread. It is a spread. So maybe I just like debit spreads, but I wouldn't even do a short-term debit spread. Maybe I just got burned too early on them. Maybe I have to go back and reevaluate them and look at them again. I'm not saying that people shouldn't do them. People do them in my Discord all the time and talk about it. But I just don't. It's just not something I personally do. Spreads need a lot of attention and seasoning. Yeah. Yeah, and it's not, I feel like they can just go bad quicker. I mean, you can do them on not a lot of money, but I hate when and I'm guilty, I put this in my thumbnails and my titles, like small portfolios and stuff. Don't worry about like the portfolios that people are trading with. Like, don't rush into things because you don't have the money. Like, if you don't have the money for a leaps option and do a proper poor man's covered call with a quality company, save more freaking money. You know, don't try and make money by risking money at a low percentage of profit and then never getting to the point where you can do it right. Like, sit on cash until you can afford a $700-$800 deep in the money leaps option with a quality company. I don't know. Like, just makes sense to me. You got $100 and if you think you're gonna try and go from 100 to 700 selling credit spreads, I'm not saying it can't be done. It's gonna be tough, man. It's gonna be tough. Do you ever do leaps without selling covered calls against them? All time, Brett. Depends on the basis. So if I can't sell a call above my basis, I'm not gonna write the call. Not gonna do it. So, I mean, my goal is always to try. I mean, who doesn't want an extra couple bucks? But it's not a requirement, which is why I don't write them in one order, which is why I don't write them as just a debit spread. Right? I write the leaps and then I wait for the right time and the right opportunity to make money on the covered call. I'll sit naked on a leaps option. When I say naked, I mean that I don't have a covered call on top of it. Like, I'll do that. Not a big deal. Not a big deal for me at all. But I'd be lying if I said that I didn't purchase leap options with the expectations or the goal of one day writing calls against them. That'd be a lie. But I have no problem. If the call doesn't work out, I'm not going to force it. I'm not going to force it. Thoughts on running the wheel inside your IRA? I've done it. I mean, you don't have to worry about tax basis. I mean, you don't have to worry about capital gains. I've done it. I don't do it regularly, mostly because when I say publicly I don't really look at my Roth IRA that much. I max it out on the first of the year, and I don't really look at it. I really don't. And because my Roth IRA is mostly VTI, well, it's all VTI and VTSAX, there's not a lot of premiums there, so I don't know. You could do it. I'm not against it. I've done it. It's not something I do regularly just because it's just the return on my time isn't worth it. All right, guys. Any other questions? A bunch of people in here. We've been going for an hour and a half. I appreciate it. I actually have to edit the Average Money podcast that comes out tomorrow. So I got to spend a couple hours doing that before I have my first day of school. First day of school tomorrow. Awesome, guys. Stone, if anybody else has questions, please leave them. I'm not going to leave any questions behind. So currently running the wheel on Neo with 5 contracts each week, as well as put credit spreads. Nice. Neo used to be a popular one in the Discord. People haven't really talked about Neo in a while. Take care. SPY. I've talked about SPY and $40,000 to run the SPY wheel. I tell you this, with $40,000, I can make a shit ton more money than the premiums that SPY offers. And we talked about that last week. And I think I mentioned that on the main channel. I did a clip of last week's live stream when I talked about ETFs with options. Go to the main channel and my most recent video, options with ETFs. I talked about why doing the wheel with the SPY is just, in my opinion, just not worth your time. All right. Next week we'll have be able to talk about a bunch of students and stuff like that, guys. As always, I appreciate it. Oh, we have 49. I kind of just want to see if we can hit 50. Oh, man, nobody leave. Nobody leave for a second. Let's get to 50. As soon as we get to 50, I'll end the stream. Finish your beers. 47. Maybe next time, guys. Till I catch you guys on the next one, stay positive. work really, really, really hard. And I beg you, always, always be kind to other people.